As more people think about the mining space and re-engage in the mining space, that's just starting. And yes, the mining stocks are up a lot this year, but when you look at the return patterns of mining stocks over time, they move in big chunks of 3, 4, 500% moves. So this is really early days of what we think is pretty opportunistic in the mining space.
Ed, thank you for joining us today. You are the head of global sales at Sprott Inc., and a big part of your job is going on the road, meeting with financial advisors and finding out what they want to do.
That's right.
And I'm curious, with the move that we've seen in gold and silver in 2025, what sort of feedback are you getting from financial advisors?
Yeah, I think the first one is kind of shock and awe. They can't believe how much gold and silver have moved really in the last 2 years. Everyone talks about this year, but it's really been the last 2 years that you've seen this gradual and then very expedited move in both assets. What's been interesting is that investors understand the value of gold from a diversification standpoint, but they are just now starting to wake up to the opportunities in the mining stocks as well. So we're excited about that. In silver, we're seeing the same thing happen. Silver's always sort of lived in the shadow of gold, and silver's stepping out as more of a critical material. So there's a lot of things for us to talk about now with advisors. As this move continues to happen, it sort of has reawoken people's interest in the space.
I speak to a lot of buy-side people. I'm shocked by how many people I speak to that don't realize what's happening.
That's right.
With gold and silver. They're so caught up in AI and ChatGPT and NVIDIA and AMD, and they're very oblivious to what's happening. Do you think that's changing, or are you getting that sense? And I guess what I'm asking is there still a lot more to come on the upside for both gold and silver?
Yeah, I think there is a lot more to come, not just from a performance pattern standpoint, but I think from an interest standpoint. You're right. I mean, I speak at a lot of events, and people are asking about gold in many cases for the first time. So it's been really interesting to see people's genuine interest start to really spike. We were just at an event 2 weeks ago, and typically I joke with my team that, 5, 6 years ago, I would have an investor roundtable, and sometimes there'd be more of us than them, meaning there'd be myself and my colleague, and there'd be maybe one person expressing interest. 2 weeks ago, we were in Orlando, Florida. We had over 30 people sitting at our roundtable. So we had 3 deep of people. So the interest is definitely there. And what is surprising is that everyone knows what gold is, but few people focus on what gold has been able to do for the last 2.5 decades. And so they're surprised to learn that it's been a wonderful diversifier in a portfolio. And then that whole education process of what the miners can do and what they look like today. So yes, people are aware of it, but they haven't really paid attention. And this big move in the market, I think, has gotten people's attention again.
And I think another point that people are waking up to is inflation. Everybody knows what inflation is, but they don't know what causes it. And if you look at the money supply as measured by M2, in January of 2020, it was at 15.4 trillion. Here we are 5 years later, it's at 22 trillion.
That's right.
That's a growth of over 40%. Are advisors aware of the fact that their purchasing power of their dollars is depreciating because of the increase in money supply?
I think they are aware of the purchasing power. Money supply, or M2, is something that is kind of a forgotten stat. And I had a professor on about 6 months ago or 4 months ago on a podcast I did, and all he talked about was money supply and the importance of that and what that actually means in the market. I think it's gaining momentum again. I think you are going to start seeing people talk about money supply in a way that maybe they haven't in the past. And not to pick on McDonald's, I travel on the road. I am guilty of eating McDonald's myself, but a bag of medium French fries at McDonald's is up 147% in the last 5 years. Big Mac's up 87% in the last 5 years. These things are real. That's real life experience of what people are going through from a purchasing power erosion of their dollar. But yeah, advisors, they do see that this is happening, but the M2, the money supply stat or narrative, is just starting to gain traction again. And people are saying, hey, we have a problem here. We need to rectify this. We need to fix this. What are some of the solutions? And gold is sort of stepping up as one of those solutions from a central bank standpoint all the way down to individual balance sheets.
And I guess another aspect of this conversation has to do with the alternative investments, and that's what gold and silver are. And the 60-40 portfolio is more or less a thing of the past.
That's right.
And now you need these alternative investments to help offset this increase in inflation. Is that also a big part of your conversation when you speak with these advisors?
It is. The alternative asset world or market is really a fascinating one. Jamie Dimon did us a great service in saying that the 60-40 model is really probably a 60-20-20 model, with 20% being in alternatives, and of that, a big chunk should probably be in precious metals. When I first started at Sprott about 10 years ago, I wasn't really a gold investor. I wasn't really a student of that part of the market, and I had a lot to learn very quickly. And as I looked at the space, and I looked at the performance patterns of gold, and I looked at alternative investments, I had this kind of awakening. I was like, gold's the original alternative investment. When you think about what it does over multiple market cycles, its performance pattern, its ability to perform differently than the rest of your portfolio. I was fascinated by that and really kind of latched onto that. So pretty much everyone here at the firm, we all think that gold's the original alternative investment. And that's really started to permeate. And as more investors, more advisors look for alternative strategies within their portfolio, gold is getting a bigger and bigger look and getting more attention. So we're very enthusiastic about that the world is kind of waking up to that reality.
I think the other thing that's also helping the sector is the fact that Bitcoin is down on the year. Last year, 2024, it was up, I believe, over 100%. Gold was up 25%. But this year, it's like the two assets have reversed.
Yes.
Do you have many advisors asking about Bitcoin at all?
Well, again, going back to kind of my record here at Sprott, when I first joined, Bitcoin was going to be the new gold. And there was a great ad. I love the ad. It was very funny. There was people carrying around big bars of gold and shopping carts of silver trying to buy stuff. And they said that Bitcoin was the new gold, and Ethereum, I think they said, was the new silver. And what I think they were trying to do and what actually happened were very different. The cryptocurrency market in general reminded people the value of having a portion of your assets outside the traditional market. And I would argue that cryptocurrencies actually re-engaged investors in the precious metals allocation. And so we've really seen that really be an uptick. And in fact, in many cases, people are either allocating to both gold and cryptocurrencies in the same portfolio, and they're diversifying that way, or they're using the cryptocurrency as a risk-on allocation, and they're using the gold allocation as a risk-off allocation. So this idea that one was going to replace the other, I think, has become a lost idea or an archaic idea. And the reality is they're working together, and they're actually serving different roles within a portfolio. So I'm actually thankful for cryptocurrencies because it really helped continue to build the narrative for why do you want to have a portion of your capital outside the markets, and gold certainly fills that role.
Ed, you mentioned you're also starting to see some interest in equities. So maybe you can just speak to that and why people are more interested in equities now, because this is something we haven't seen for many years.
That's right. If you look at the return patterns of the physical market versus the mining stocks, the equity market, there was a huge disparity between the two. Gold continued to do well, and the miners were sort of just left ignored. And I think there was a couple things that were happening. One was there was other risk-on opportunities out there like cryptos and other alternative strategies out there that in the past people would look to gold mining stocks for that alternative return pattern. Now that gold has continued to do what it's done, the margins on these mining stocks are spectacular. The return on invested capital, the return on assets, the return on all these different matrices look very attractive. Their debt to equity, very attractive. Their dividend yields are actually higher of that than the S&P 500. And so institutions are starting to take notice and say, hey, there's something going on here. And so we think as more people think about the mining space and re-engage in the mining space, that's just starting. And yes, the mining stocks are up a lot this year, but when you look at the return patterns of mining stocks over time, they move in big chunks of 3, 4, 500% moves. So this is really early days of what we think is pretty opportunistic in the mining space. So advisors are thinking about it again. And what I always say is think about the physical market first, and that's a risk-off allocation. And then the mining stocks are a risk-on allocation. It is an opportunistic allocation. So they are very different pieces of your portfolio. But yes, people are being more engaged in that space right now, and we're very enthusiastic about it. We're spending a lot of time educating people on what this looks like and how it can perform and what kind of impact it can have on your portfolio.
Something else that I find quite interesting is that we have a new non-traditional buyer in the gold market, and that's Tether, the world's largest stablecoin provider. And I've read in the press they own somewhere between 80 to 100 tons of gold, and they continue to buy it. And they're also buying up a number of royalty companies. Are you hearing any advisors talk about this, or is anybody asking you who Tether is and why they're buying gold?
Not yet, but I think after this interview they probably will. It definitely got our attention probably about 6 months ago or so, and we spent a lot of time looking at what central banks are doing. Well, Tether has actually surpassed the acquisition of physical gold over and above what central banks are acquiring, which has really got our interest. So we don't know if that's the tip of the spear of other companies starting to look at those opportunities as well, what they're actually doing. They're using that to back their crypto, whatever's happening, we're not completely sure, but we know that more large investors are allocating capital to this space. And more people, more investors, more advisors are starting to think the way central banks and Tether are thinking. Use a physical asset to back a non-traditional asset like a crypto asset, or use a physical asset to offset a asset like a stock that pays dividends and so forth, and make that be a bigger part of your equation. Going back to what Jamie Dimon said about the 60-20-20, there's different ways people are adopting that, but we're seeing more people adopt it. And that, I think, is the most exciting part of this, is that it's got a bigger seat at the table today than it's ever had.
Elliott Management, a large fund based in New York, they run about $70 billion. They have a large position in triple flag precious metals. They recently acquired a stake in Osisko Royalties, and they've become an activist on Barrick Gold. And this is also generating a lot of headlines in the press. Do you think this is going to bring more investors, more generalists into the space?
No question about it. It's now okay to talk about gold. And I think that's the biggest thing, gold mining stocks and so forth. It wasn't that long ago that you were, a gold bug. You heard that term, and that's sort of a negative term in my mind. If you're a gold bug, like, you don't think anything else has value in some cases. Some people view it that way. Or you would talk about it at a cocktail party. Oh, that's the weird gold guy in the corner. He's the gold guy. Don't engage with him. That narrative has changed drastically. People want to hear what's happening in the space. And so I do think I don't know if I want to use the word cool again, but it's certainly acceptable to talk about in different types of investment circles today that it wasn't maybe even 10 years ago. So I think that goes a long way, not just on the physical side, because the physical side's always had a place, but really this mining stocks and the royalties and the streaming, all these different ways that you can participate in this space, people want to be educated on it. And that's one of the things we try to do as a firm, is actually educate people on how to think about the mining space. We're not really here selling product and selling funds and ETFs. We are, but we're really not. What we're trying to do is educate people on why should you be thinking about this to begin with.
Most of this discussion has been focused on gold and silver. What other products are advisors asking you about?
Sure. One of the things that we've done in the last 5 years is we've really started to look around the room and see what else is happening out there. And we saw this whole movement for an energy transition, or I like to even say an energy addition. We're still going to have oil and gas probably for our lifetime, right? Well, that's not going away anytime soon. But we know we need other ways to create, store, and move energy. And so this whole critical narrative, a critical material narrative, is really starting to take shape. And what's really happened also, which is interesting, is silver has moved into that conversation as well. So silver's always been sort of in the shadow of gold in a lot of ways, right? If gold goes up, there's this gold to silver ratio, and people paid a lot of attention to that. Well, silver's really stepped out of that. It's gotten away from sort of the big brother of gold, and it's become its own precious metal / now critical material. And that really got us thinking, well, what other critical materials are out there that we can participate in from an investor standpoint? Most of the investors out there have participated in this critical material movement as a consumer. Someone's bought an electric car, they've gotten electricity from a solar panel, but they haven't really profited from it. And what we did was we looked at ways that how can you actually participate as an investor in this movement? So two of the metals we really like, we love uranium. If you look at what's going on in the tech sector and talking about data centers and AI and what they're doing, financing these small modular reactors from a build-out standpoint, buying real estate around large reactors, new reactors coming online, existing reactors having their operating licenses extended. All these things are happening. That's woken the world up also to, well, how do I participate in that? And uranium is a very direct way to do that, the way you would do gold and gold equities. Physical uranium and uranium mining stocks is a way to really participate in that movement. So we're very excited about what's happening in the uranium market in a way to produce clean, sustainable 24/7 energy. And wind and solar and hydro, all those things are a solution as well. But things like hydro is geographically sensitive. Wind and solar is not 24/7. There's no base load there. Nuclear is a base load energy source. So we love the uranium story. And then copper, nothing can happen without copper. This video couldn't happen without copper. You can't move electricity from point A to point B without copper. And just the revitalization of the US and Canadian markets is one thing, of rebuilding and renovating and adding to the electric grid here in Canada and in the States, but also the electrification of the globe. Areas like China and India who are getting access to more electricity. We need so much more copper than we currently have. And even though copper is one of the best recyclable metals out there, there's not enough of that. So those are two of the metals we're very enthusiastic about, and we're talking to advisors about, and they are asking questions on how do I participate in this from an investment standpoint? How do I think about this in my portfolio from a diversification standpoint? And we're really on the front lines trying to educate advisors on how to think about the critical material narrative that's really just started.
Well, Ed, this has been a great discussion, and I want to thank you very much for sharing your thoughts with us today. Now, you mentioned a couple of times the importance of education, and your firm does an excellent job on that. If somebody wants to learn more about gold, silver, uranium, where can they go?
I'd say you got to start with our website, sprott.com. We do a tremendous job, and it's self-serving. I'm selling our book on this, but our team does a tremendous job with research papers, market intelligence, third-party articles. We spend all of our time trying to educate people on the universe we live in, the opportunities we're seeing, and then how to invest in those opportunities. So I think you start with sprott.com, go from there. Talk to our sales team, call me. There's a lot of ways to learn more about what we do and how we do it, but starting there is a great place to start. And
Ed, you also have a podcast?
I do, yes. It started off as kind of a passion project during COVID, and it's funny, I was talking to one of my colleagues who actually helps me produce the podcast. And the first podcast was 8 minutes long, and it was just me, no guest, talking about gold, how to make gold a productive asset. And it's really morphed into something so much more than that. We don't talk about Sprott. We don't talk about product. We really get industry experts, whether it's on the nuclear side or on the not the oil and gas side, on the, the uranium side or on the copper side or on the gold or silver side. We get industry experts out there to really talk about what's happening in that space, how to think about it. I've had professors on. I have all kinds of different people on the podcast. So started out as something to do kind of for fun during COVID, and it's really turned into a really nice education piece that advisors use with their clients on here's why we're thinking about this space. Listen to this 20-minute podcast and really help educate people on the why behind these investments.
And if somebody wants to follow it or listen to you, where can they go?
Pretty much every service out there, from iHeartRadio to Apple to Spotify. For better or worse, we're everywhere now. So,
and what's the name of the podcast?
Sprott Radio. Maybe we can put a vote out there if we should have a more creative name, but that's the name we've been going with for the last 5 years, and it seems to be serving us quite well.
Well, I'm a follower, by the way. You do a great job.
Thank you.
Ed, I want to thank you very much for spending time with us today.
Yeah, thanks for having me. This was fun.